following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 11th day of September, and of course our deepest wishes and condolences and memories for that event are right here. Most importantly, I wanted to look at the markets in a technical way today, being the Friday, where we do a little bit more detail in the Chapman wave methodology. Also wanted to show some real mini charts here. This is the 2 minutes. This is still the September contract of the YM. That's the Dow on the left, and the E-mini September on the right, 2 minute chart. Also have right here the 10-minute chart. Let's just run the numbers. The Dow's down 34 at 16,296. The S&P is down way deeper. It's down 0.44%, double the Dow at -8 at 1943. The comp index is down 26 at 4769. And the Trin right now is 134. We spoke about Trin last night. We spoke about the VIX. The volatility index is at 25.47, up $1.10. And interestingly enough, we've got gold Friday, of course, down 9 at 1,099. Silver's down 34 at 1430. Platinum's down at 9.6. You've got high-grade copper back in the 243 area. Crude oil is down 44 area. Bonds are at this point up $1.25 at 155.02. And the dollar is down about 0.01 at 95.42. What I want you to do right now, just to show you from a few days ago, you remember I did Larry's show, and I said that there was this pattern where I'm looking at the Chapman wave right shoulder failure pattern. There should be a failure at this peak C, which would be a C minus in the E-mini. I think it was at about 1975? Yeah, 1975, 76. Well, lo and behold, I said, if you take out the low, you could start to expand to the downside. Well, we did that. We did an arch formation, took it out, went way back below the 200-period moving average, that coral color line there, over there, and you made some kind of effort to hold. That support became resistance. Plop, you went all the way down and extended all the way to 1993. 2 bars with lows of 1993, and that was on the 9th of September. At 1840 and 1850, that is not the price, that was at the time, 640. And then it started running, it went to ABCD. And also what I'd shown you was, in the Chapman wave methodology, we like to look for peak A, B, C, and then a D. D's where a whole bunch of other things can come into, but that's your objective, to get you to a D. What happened is you went to peak ABCD, went to an E, big candlestick bar. That should have been a rectangle formation. Instead, it powered higher. That was a positive and started an A, B, C. Then you got to a D at 1967. Plummets back down, goes to the slow. Why is that? I must open that. There we go. Okay. 1928 goes below that, certainly a lot below 1993. Goes to 1928. Is that 1993? Did I do that correctly? I'm sorry, 1933. I thought, that is really weird. How can it be 1993? Change it. 1990. A 3 instead of a 9 does make a little difference. And you got 5 points low to 1928 in a single move down, just about. You remember I was talking about that A pattern? That was the A pattern that was fitting in right here. That's what I drew. And I said you can get a 1-to-1 if you break to the downside. So we broke to the downside and we started a V-shaped formation. And then went to peak A. I drew that in. I said that we should get there. I first of all drew that little circle in. Then I drew the left side, right side price time match. I also drew this in an extension of the Chapman wave inside wedge. And that said that we could go to the 1952 area, 52, 53. And at that particular point, what happened was you went to a peak C minus because it was under the previous peak D of 1967. You went to 1965.25. Again, a single leg down, even though it's trough A, B, C, D, just like it was before, A, B, C, D. And it goes down to 1943 round number. Then it starts to move. You remember I had a call yesterday and I said, I believe it was Lou from Nashua, and I said, I just don't think I'd do anything right now. I'd be prepared to start looking at a short side of it, maybe at 1965, 67, just say 65, 56, 57. That's right, in the 1956, 57 area. That's where I started to consider it. Well, there was a rally, ABCD, a second one, ABCD in the Chapman wave, 4 peaks, and that's where you get to 1958.75. Well, what happened is you made a turnaround there. You made a left side, right side price time match from the low of at 15.50, that's 3.50 in the afternoon on the 10th at 1943, using the exact peak D as a pivot, what I call a plumb line, center line. We went all the way down and you took out the left side low in about 2 bars quicker in the 10-minute bar, tried to rally, failed, and you went down to a lower low. Now what we've got is something very interesting. You see the arch formation? You've got yet another arch formation. You see the conglomeration of long candles that keep coming back down to the low. It's trying to form a base here. It's trying to say, hey, this whole area between 1937.50, I'm using the September, I usually keep trading until the last announcement that says roll over. So this is 1937.25 on the left and 1937.50 on the right. So 25 cents higher. And now comes this interesting thing, chart patterns. That's really what I wanted to focus on today. So in the chart formation, what are we looking at? We're looking at the same thing of an arch, an H, a lowercase h down. There's the arch going to a lowercase m. And that, once you start the second m, that becomes a test in frustration. If you are trying your best to trade it with a longer term view, why? Because it makes shorter term very sharp. I mean, if you're trading this intraday, these are huge moves on the E-minis or the YMs, the Dow minis, whatever. This is big stuff. But when you look at it in the context, and that's what I was doing last night in my webinar, I want to contextualize what the VIX index really represents. And I try to make it as simple as possible. I try to explain it philosophically as no clouds or dark clouds. Just think of the sky. If there's a clear sky, there's no bad economic news, the markets tend to drift higher. And if there are clouds in the sky, the deeper the clouds, the thicker the clouds, the greater the chance for a storm. Just try to think of it that way. But I also spent a lot of time talking numbers on the VIX. What are the numbers that represent importance for me? And we had a lot of fun. I had some wonderful questions. I had a couple of follow-up questions. Let me just see if I can do this swing around here. I had a question here. I showed the VIX index. I also showed the VXO. I got an email from Charles over in Vietnam, and he said, "Hi Basil, my name's Charles, and I'm a new subscriber to the opening call, but I've been a long-time listener. I purchased Tiger Dollars and will put it towards a 1-year membership." Hey, folks, get those Tiger Dollars. It is really, I mean, the market doesn't give you 20, 30, 40% discounts, does it? Okay. So thank you, Charles. Have you done analysis on the VXN and the RVX in particular? I see the VXN, and then he goes on with really good questions. And last night I was talking about how a spike in the volatility index at a high doesn't always mean that it's a market low. There is sometimes a miss. The miss can be months, weeks, days. It depends on what time frame you're looking at. So please go. You remember back in 2008 with the bank crisis? What happened is you got this whopping spike in the VIX, but you didn't get it. That wasn't the low in the Dow. Remember, the Dow had to go to March to make its low. VIX was way below by that time. So it's a very subtle thing, how you trade using the VIX. And over a period of time, the machination becomes a lot easier. So a couple of things I wanted to talk about here. The VIX index, let me just move this away. You see, so the price is trying to rally, but it can't because of that 9-year period moving average, which is the fulcrum. And it keeps saying, whatever you do on the upside, I'm going to do on the downside based on this 9 EMA. And it says this is the most critical period. Why? Because the futures are down 9 at 1940. And it says, I keep wanting to test. If I use this as an example, I'm saying, watch out, because the close underneath 1937.25 in the 10-minute chart that doesn't come back and go above that level within 3 bars, not good news. So this is a very critical period as we're talking. All right, so let's look at this. So the question is, I don't ever remember charting. In fact, I even have to look it up because I forgot about RVX. So I'm going to do that. I've done it. I did it the moment I got his email. I immediately went to the charts. I had a moment and I did it. Just hit the wrong thing. So $RVX.X. There you go. Okay. So I've done it. The RVX is this is fascinating because I know I thought about it a long time ago, then I completely forgot about it. It's the CBOE Russell 2000 Volatility Index, ETN, and it's making up, let me move this away. And look what's happened. If I go to the daily chart, it went to 46.66 on the 24th. It's trading now at 26, about what, 47%, 46% below. Now, what's really important about this is that if you look here, so it actually went, the question, I had a wonderful question in the den last night. Do I anticipate Ds, peak Ds? I do in everything else. Do I anticipate it in the volatility index? And the answer is, I look at numbers. Numbers are way more important to me than the Chapman wave count, number one. Number two is, because it's an emotional vehicle that only partakes really on the upside periodically over the whole year, I do not look at it. If it does make a D, I treat it the same way as if it was an A or a B or a C. The fact that it holds in the highs, that would be very important. So this made a peak D, and it went to 46.66, and now it's pulled back. And this is saying to me, we in the opening call, we have started adding to the downside, to the short side. But I'm keeping a lot of powder dry, because I see that there is a chance to wiggle around here, not breaking down. Because look at on a Friday, look at what happens in this weekly volatility index. Every time it's made the spike above the 200-period moving average, the very next bar has been way below. Every time, even except there. All right? And that was that conglomeration over the December-January period, where we're getting quite a lot of volatility. So here we are. We're way above the 9-period moving average. We're way above the 200-period moving average. So that says this is different. I love it when people say it's different this time, and then everybody else says, oh, roll the eyes, of course. This time it is different. There are a lot of things going on. You might even have made an F/A in the RVX monthly chart, the CBOE Russell 2000 Volatility. I'll be back. Basil Chapman, Dow's down 45, S&P's down 10. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So I'll jog a couple of things, and let's just quickly go back to that 10-minute chart. Remember I said that a rectangle formation or I typed it into the den, or did I say it here? A rectangle formation, or in this case, an H through an M pattern, can last a lot longer than your patience. And every time you think it's going to break down, that's where it reverses at the bottom. And every time you think it's going to break up, that's where it reverses back down. So look at this. Here we are in the 10-minute chart, left side, right side. It says by 10 minutes to 12, that's the opportunity to break 1937.25. Test it, because if you keep running up, you've used up time. And the next thing we have to look at, instead of an arch formation, is a cup formation. Fascinating how it just goes. It can drive you nuts. And if you're trading it this way, you just want to step away and say, hey, I don't need you. But if you know how to trade it, you trade from the bottom to the top, from the top to the bottom. You don't trade a breakout, because when it breaks out, happens when you least expect it. And it's okay to lose one, because you're trading well on the bottoms going to the top and the top's going to the bottom. And then you know you've made a mistake because it breaks out. Meantime, it's on its way to the top of the range right now, 1942, trying to get to 1943, 1944. Okay, let's go back. So, two things. The VIX index made a high back in 2008 in the bank crisis, but the Dow itself made its low. Look, oops, I went to the wrong thing. Dow itself made its low, INDU, right there, 2009. months later, 5 months later, 6 years. So that's very interesting, isn't it? So, okay, back to our story. So yes, I do use those, the Vixen, look at the Vixen, and the question is, I will spend some time over the weekend. I'll have a chance to do a lot of work on the Vixen, which is the CBOE NASDAQ 100 Volatility Index, and also very fascinating here because this is an F/B to the upside. We're going to be looking at this very closely over the coming months. I made a big deal last night about the Dow candle, the monthly candle, and so that to me is very important. Just had a note from Paul. Yes, I agree. He says, I just watch CNBC. I just don't watch CNBC or I don't watch anything in my office anymore. I just shut the whole thing down, and that's it. They interviewed the president of Cantor Fitzgerald. You know, that guy was remarkable. I remember him coming on air and saying, we've lost about a third of our people, and we are going to, we'll make good. And wow, he made good. And, you know, admirable, great. I remember there was someone from Cantor Fitzgerald. He used to write for the street.com, and he was short the Qs. He was a wonderful analyst. I can see him now. I think he had red hair. Just a wonderful, wonderful technician. No showing off, no nothing. His trades were his positions. That's how he spoke about things, rather than come up with highfalutin stuff. And he was very, very short. And he was short the Qs, and he died. And I always wondered, how tragic it is. And his widow must have, I don't know, made a fortune. But good grief, what a way to go. Yeah, Bill, not Mechem, Bill, I think was it Bill someone? Somewhere in the den mentioned his name. Meacham? No. I don't think that was the name. I would recognize it. Gosh, I don't know. I haven't, Anyway, so the stories are innumerable. They are sad. It's a tragedy. What can we say? So the Vixen also went from a trough to, this is a peak C in the weekly, but the monthly is either F or a B, and this is going to be really important. Why? Today is Friday close, and I can see signs right. I've been talking about this all the time. I don't think we're going down. I see that Andy has a paper that he's written, and on the heading it says Seeking Alpha, and it says markets take the stairs up and the elevator down. So I'd like to speak to that because that is an expression that you really can't argue with. It's kind of what happens, but I am going to argue with it. And I'm going to say only in crash mode is that true. In crash mode, one bar can take out 6, 8, 20 on the left side very easily. But if you look at this, let me show this to you. Probably it's a little easier to see here. If you look at this pattern, you will see that you can make a very long, I do want to see it, show it here, because here I've got it with the arch and everything. You can make a very arduous, extended distribution that takes a long time. And in the Chapman wave, the left side to the right side was an exact match, almost an exact match, just missed it by a couple of points. And only then did you break down. So I'll talk to that. It's a great expression, that's true, but I also want you to point out that I think this market is just lower highs and lower lows. We'll come back. Dow's down 4.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. The TFNN End of Summer Tiger Dollar Sale is here. We've just announced our best Tiger Dollar sale is back for 5 days only. This week, you can get up to a 40% bonus on whatever you spend when you purchase Tiger Dollars. Tiger Dollars are the best way to lock in added value and extra savings for any of your TFNN products or services. Normally, we only offer a 10, 15, or 20% bonus, but for this week only, we've doubled all our bonuses and are giving away 20, 30, and even 40% bonuses on all Tiger Dollar purchases. Tiger Dollars can be used for any TFNN product or service and never expire. So whether you're a subscriber already or planning on trying out a product soon, now is a perfect time to get your Tiger Dollars. For more information and to purchase your Tiger Dollars today, visit the front page of TFNN.com for all the details. Remember, this sale ends Sunday, so act now and don't miss out.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, so in this remaining time, a couple of things I want to do. One is we'll be looking at these charts periodically, but there are some great questions that I thought I'd get to now. Just open them up to the floor, and we'll see what happened. And first of all, thank you, Gemma, for that. Yes, SMHs, I typed it incorrectly. It has made a peak D. I'm still looking at it holding quite good strength at this particular point. Whether we go back into the short position where we did really well, I'm waiting. I'm just trying to have patience here. And that's the thing about this market. When it goes sideways after a massive move up, you realize that this wasn't very big news at all in the market. And the VIX index, or whichever index you want to look at, screamed way above all the others where there really was bad news back in the Greek crisis. Everything. But bankrupt. This went to 53.29. To me, that says that it does create a floor for the moment. And that floor for the moment is something that I want to respect. So I don't have to, we have had short positions, we add into short positions. I also have a long position, but I don't think this is a time right now to really get carried away with risk. Not just yet. It could come. And the thing is that I was trying to make the point that Andy's absolutely correct. It goes up in stair steps, but it can also come down in stair steps. It's only when you get some financial news, when you start to see the VIX index start to scream to the upside, can you get that move to the downside? Otherwise, I can show you dozens and dozens of charts. You would not be able to say that. You just would not be able to say, let me just look at this. Let me look at this here. SPX.X. So it, like everything, it has a time and a place. Look at the way you've gone up in the S&P from the 1820 low of October. And then you had a volume price spike hike. You remember that's the thing that I talk about. Gives you at least 28. I do for the days I do it. In the weeks I do it occasionally, but even in the weeks, it's given you 28. And if it's successful, it can go to 52. And lo and behold, it's a year later that it actually comes back and retests the area, but not the price. It goes to August of 2015. It goes to 1867. It still hasn't broken the low. So when you look at it in that context, you've just gone up and you haven't even really come down in an elevator because it keeps bouncing around. You come down, you bump, and you go sideways. You come down, you bump, you go sideways. Very often, that's the characteristic of certain candles. All right, I wanted to get that out the way. And so I agree, but it's a time and a place, as always. Now, let's go back to what I was looking at. The SMH, as I said, made a peak D in the daily, but the technicals at this particular point are still quite good. So the next thing is, great question, Bill. He says, has everyone stopped eating in the world that farmers do not need potash to grow crops? With the price of energy low, which they need a lot of to produce the product, you would think that the stocks would not be so low, or will this be a rotational group at some time? Or is the dollar affecting these commodities along with all others, i.e. gold, silver, oil? Potash. Let's look at potash. Hey, this is just a wonderful question. In fact, I was with someone yesterday afternoon, and they were saying, you've had a 50% cut in oil, and he was enumerating all the things that should make people really bullish. And I listened to him, and I thought, gee, you have some really good points, but the technicals in the market don't actually go commensurate with what you're saying, but those are very good points. Okay, so here's potash. Well, potash, POT is the symbol, and that's Potash Core Saskatchewan, has, look at this chart. Let me squeeze it. I'll have to squeeze all these charts so you can really get the context. This is that bear phase. You've had a massive, huge markup by going to the 80.54 peak F high in the monthly chart. Potash Core Saskatchewan, trading at 24.87 right now, down 48 cents. Hit 80.54, plummets down in just 8 months. It goes down to 15.85. I mean, that's like the NASDAQ correction. And then from 2000. And then it rallies all the way back to 63.97, February of 2011. And kaplop, it goes all the way back down. And now it's making that bump, that arch formation that fails to the left side. It's closed 1 month, August, underneath the 200-period moving average. And if it closes September underneath, that suggests that the next support will be at 21.22. So something has to happen over the next couple of weeks to really change things. Have a look at this. Moz. Moz, of course, MOS, is the Mosaic company, also in the potash. I used to have this notated. It went to a peak, something or other, also back in August of 2008. No, June of 2008. At 163.25, has a little dip down to 21.94. November of 2008. Just 1, 2, 3, 4, 5 months later. Rallies peak A, B, C, D, goes to a peak D. February of 2011, and then it goes in the sideways to down. Lower highs, lower lows, lower highs. That's what you got to think. The tide is lower highs and lower lows. I don't see a buy yet. I see a chance that on a short-term situation, you can retest the low of the 24th at 37.20. If you don't get there and you start another pattern, it's just that H pattern. Look, it's just this. That's all we're looking at, is the H that can go to an M pattern. So all it's saying is that the upside right now is extremely limited. 41 to 42 is the 200 period, is the 9-period moving average in the weekly. 43.77 is the 9-period average in the monthly. So that's that AGU, agrarium, AGU, agrium. Agrium has had a much better chart pattern. In fact, I looked at this recently. I don't know why I did not notate it. Oh, because I thought commodities are out. A, B, C, D, E, A, B, C, finally gets to a D over there, holding very well, 102.44. It had an all-time high of in June of 08 at 113.88. Plummets to the 200 period. What a beautiful example of the different moving averages. Plummets to the 200 period moving average exactly in December of 2008 at 22.08. Rallies all the way back to the most recent high of March, was it? Yeah, March of 116.81. 65 and then 81. That's like a 2-bar Chapman wave reversal. Gonna watch this. This is the best of the bunch. So all I can say is that this is the one that I would look at. If anything was going to be rallying, I don't know why. I can't remember exactly what area they are in the fertilizer business. But there you are. A much better pattern. So I'm putting down here AGU. I'll make a big note and I'll do a lot more work in it. I wouldn't do anything right now, I don't think, but I will do some studying of it. ABC does a C minus in the weekly chart. So AGU is the best one of the bunch so far. And right, as it down the den says, everything AG, agricultural in decline. Absolutely. But this is the best of the bunch that I've come across so far. IPI, oh man, IPI, Intrepid Potash Inc. Look at that. That is just horrible. Oh, that's a lousy one. I don't even want to look at it. BG. Now that had held up way better much earlier, and then it went kaplop. Look, it was doing much better. It took all the way into May of this year, 93.04, 93.03, a 2-bar Chapman wave reversal. 93.17, 93.04. Oh, a double top. Groucho Marx's eyebrows top. And it plummets. This one is not looking good either. That BG is what? Bungie, wasn't it? Yeah, Bungie. And CF. We used to have a wonderful person here. Used to do a show at TFNN, Ed Young. And his expression was always, the cure for low prices is low prices. And the cure for high prices is higher prices. And he's right. I mean, at a certain point, you just can't go that much higher, and then that cures it. So here's another one that's acting way better. CF is CF Industries Holdings, but it's still in a downtrend. You know, the bear market hasn't finished yet for commodities. Just I want to keep it as simple as I can. So thank you, Bill. I'm going to keep them on my list. AGU is the one that I will focus on. There was a third question. I think I got you. Okay, I think I've got you almost all the questions. If I've forgotten one, I'm sorry. So when we're looking at, and let me show you something, I'll do this again. You remember the TRCCI, the Reuters, excuse me, the Reuters Equal Weight Commodity Index? Look at the way it's come down, and it's got everything. I mean, this has everything in it. And it's broken the uptrend line. It's under for the third month in a row now. It's under the 200-period exponential moving average. The stochastic is trying to make an H bar, a lowercase h. It's really a soft W bottom. And the MACD is just starting to improve. I would suggest that we've got about another month or two to go, and then we're going to see a pretty decent rally in the commodities. That's just the way the timing looks at this particular point. But I can't say that we're going to get out of that bear market for a little while. Why? There's this little fellow called the dollar. And while the dollar's pulling back, gold at this point should be up. The GLD should be up $1.75. Dollar's pulling back, has been pulling back for 2 weeks. And yet gold at this point isn't taking that opportunity. So in the Denyo says, King Dollar, you know, there's no question about it. The dollar is the heavyweight here. And I think the dollar is telling us that, in a sense, that's the reason why those cyclicals in the Dow have just been hammered. It's also telling us that the Euro, EUR, USD might have little rallies, but it isn't going to have a major rally just yet. So we're going to be watching this real closely. And if you look at the DBA, I wonder if I've still got it notated. I seem to have lost some of those notations. Nah, Haven't got it notated. There's the DBA. So there's a bit difference between the DBC and the DBA. And the DBA is the power shares, DBA agricultural. One has more of the metals, the other has more of the grains. A DBC. Commodity Index Tracking Vehicle. Yeah, what can I say? It's making that arch formation. It is attempting to make some kind of, at least I'd say, an attempt at a bottom. So maybe it's in another couple of weeks to go, and maybe it's in October that we do see something like that. So that's the issue. Now, I had a couple of things that I wanted to do today as follow-ups to last night, just in terms of clearing up any what I didn't quite finish. So I didn't finish doing what I wanted, which was to show you that the VXO.X did participate in the crash of 1987. And that was really important to me because I distinctly remember it being up way in the hundreds. It was 172.79 on October 87. So you can see that that was an aberration. It was the surprise. It was the force. That was the tsunami. That was the real tsunami. Other times we've had things that you could prepare for, so they didn't come out as quite the same surprise. That's not 557. That's 57. It's not bad enough at 57. All right. Look. If you can think that in the financial crisis, the VXO in this is a long-term capital, that was a real crisis. It went to 60.63. So this little Chinese market decline or whatever it was just recently, 103.44 October of 2008, that was serious stuff. So the little spike that we had the other day to 43.99 in the VXO, 53 in the VIX, there was none of that. We were down 500. It looked like, okay, we'll be down 500. And then there was that program selling. And that program selling really was the issue. And that issue says that I've got to treat the recent high in the VIX as a form of an aberration. That it really should have been more like 33, above the 20s, maybe 28 to 33. We were in the 20s. So the spike, look, on the day before, we had a high of 28. A really bad day should have seen 33 to 35. So 53.29 was programmed. It was a machination. It was something that was done more by, I think, more by computer selling than anything else. Now we're going to have to get used to that. And I'm saying, from the chart formations that I'm looking at right now, that was, I can't call it an outlier. It is, if you look at it as an outlier from recent events, but I would say that it was an aberration. An aberration meaning it was something that didn't just happen in terms of, last night I spoke about volatility, human volatility, emotions, etc. This was beyond normal. And as such, what we should have seen, we should have heard about an attack. There was mention of an attack on the United States. And then I could see 53.29. So that's saying to me, I need to take off 25 to 30%. And at the VIX right now, 25 really should be more in the 18 to 17 area. That's 7 points. So I'm saying that I cannot use the VIX right now in its normal way. I'm making adjustments constantly in my mind as to what I'm thinking, which is one of the reasons why I said to subscribers, we just missed buying the VIX yesterday. And then I said, we will not buy it today unless there's a very sharp drop in the VIX. And that's the safest way to do it. I'll be back. Basil Chapman. Dow's only down 5.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
So, folks, we've got the pattern that we were looking at, that arch formation, retested, and then successfully held. And what did it do? It finally broke the rectangle. And that's the thing that you always look for. So in all of those patterns that we wait to see whether or not it's going to break out, up or down, instead it goes right back into the rectangle. This is the move. What was the hint that it could possibly happen? Well, it was this right here. Here's the the Dow futures in the 2-minute chart. It started another cup formation way higher and then broke out into a BC, and now it's made a D in the 2-minute chart. Anybody watching, you actually saw this happen in real time. And here it is in the ESU. We've gone to a leg E. And what's most important, you see the VIX index declining there? This chart here can also be the NQZ right there. Whoops, I didn't get it because I typed on the chart, type away from the chart. NQU, no, I said a Z, right? 1.5, and that's the NASDAQ, went to a D. Right now, it's in a D. And so there are a lot of things that you can use in terms of technique, but that cup formation, the arch formation, and straight lines, that's, to me, the most important thing that you can get out of market analysis in terms of what chart patterns, how chart patterns are formed and what they do. And this says to me, with the Dow up 24 now and the S&P only down 1.5, that the residual strength that we've been looking at is still extant in the market. It is still there. Now, let me just go back to this chart here, and let me show you what we're looking at. This is the Dow chart. So there is still time. You can still pick up my webinar that I did last night. I think it's, I try to cover a lot of areas that I wanted to focus on, and I thought that would make a real simple explanations for people to be able to check it out with an uncomplex way. And so you'll be able to, it's archived for 30 days. They're already on your page, your subscriber page. So check it out. You can and send any questions. So this is what I was looking at, that we have got MACD working quite nicely to the upside. Stochastic is holding, that if there was a sharp decline that held, then you would start to see a deterioration. But instead, what we've got here is just enough strength to have a little more oomph to the upside. And we're seeing that right now. And it's going to make a big difference with the Dow up 17 if by the end of the day it can even start to get into it 16,348 into the 16,370s, 16,390s. Why? Because it'll continue the sideways pattern until there's a break to the upside, and that would be in the 16,720s, or to the downside in the Dow, which would be anything at any point in the next 2 weeks under 16,000, watch out. You've got to be careful. But in the meantime, you've got really good support in the 16,002. What was today's low? 16,244. I'd say anywhere between 16,250 now to 16,220 is very good. But another move to the downside by later today or tomorrow, taking out the 16,200 would say no. This second arch formation wants to go below. It wants to test the low of 15,979 that was made back on the 1st of September. So our parameters are really clear. Trading range stuck for a little while. That's the way I'm looking at it. I'll be starting to send out charts to my subscribers tomorrow, probably early Saturday morning and over the weekend, because there's a lot to look at. There's a lot to do. I want to see where this internal strength is able to take us, and whether or not maybe we'll add a couple of long positions to ameliorate some of the short positions if I don't want to get out of the short positions. There are a couple of stocks here that are acting quite nicely. And I think you have to look at this market as both a market of stocks and indices. And there are some stocks that are holding well. And there are some stocks that are really acting very poorly. So with that said, have a wonderful weekend. Thanks for being here. And I will see you Monday. Have a wonderful weekend, everyone. And stay tuned for Nico and Paige.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,